Welcome back to Quest Means Business. US employers refuse to slow their pace of hiring. More than 300,000 new jobs were created net last month. Economists were expecting closer to 200,000. Now, given the latest numbers on jobs and inflation, the probability of a May rate cut from the Federal Reserve is practically nil, according to futures trading. That matches comments today from Fed Governor Michelle Bowman. She said it's not yet time to cut since progress on inflation has stalled. Dana Peterson is the chief economist at the Conference Board and joins us now. Dana, great to have you on the show. Your assessment of what did feel like a bumper jobs report today.
Yes, we definitely did see another sizable reading in payroll gains, but I would note that most of the gains continue to be in basically three sectors. And these are the sectors that are suffering from extreme labor shortages. That's government, leisure and hospitality, and healthcare and social services. But even away from that, we're seeing some broadening in labor gains out there. The unemployment rate fell, labor force participation ticked up, and wages remain sticky.
Yeah, and we didn't see excessive upward pressure on wages, to your point. In part, I believe, and you can help me understand and explain this, immigration is filling some of those gaps that you described with employers struggling to find workers. Actually, construction, I think, was a great example of that.
Well, indeed, immigration is slightly above the long-term trend. And yes, that is helping to fill some of the labor shortages, but it's clearly not enough. And indeed, what I did say is that wages are rising in a number of those sectors that are experiencing labor shortages, as well as those sectors that are really hot right now, like construction and manufacturing, because the US is spending a lot of money on building out infrastructure, fixing what's broken, and also building factories as companies are reshoring.
Yeah, I called a pretty big investor this morning and I told him the good news on jobs, and he was silent for a second, and then he said, actually, this is terrible. The Fed's going to end up having to hike rates, not cut them, which admittedly perhaps is a little bit melodramatic in terms of a response, and it's not terrible news. But you're still expecting 1 percentage point of interest rate cuts this year. When do you anticipate them coming? Because I can certainly see investors pushing back their expectations. I believe now a full cut's not priced until September of this year. I'm talking a quarter of a percentage point cut.
Right. So the thing is that there's still plenty of room and there's also still plenty of time. The Fed needs more information. So we think the Fed could potentially start cutting interest rates in June, and that would give them 5 opportunities before the year is over to cut anywhere from 75 to 100 basis points. And certainly between now and June, the Fed is going to receive many, many more reports on inflation, wages, and also first quarter GDP. So it's really too early to start really changing your views on the timing. I think the Fed really wants to see whether or not the PCE deflator inflation gauge continues to track towards 2%, which it has been, despite some large monthly gains recently. And also wages are slowing, but not as fast as they'd like. So if we could see some continued traction there. And we also think that real GDP growth in the first quarter of this year probably was around 2.25%. That's healthy, but certainly much slower than the outsized gains we saw in the last half of 2023. So I think all the stars are aligning for the Fed to consider an interest rate cut, definitely probably by the middle of this year, and several cuts at that. But again, we really need to watch the data.
Yeah, the data dependency point, I think, is crucial here. And the Fed have said, look, we'll be patient to continue to watch that before we make decisions. What would it take? And you mentioned a number of data points there. What would it take for you to adjust your expectations, as you said, for the first cut to be in June?
Well, certainly if we continue to see 300,000 job gains. I mean, again, a lot of it's concentrated in just a few sectors. But the thing is that still many people are working, and many companies are still telling us that they're going to hire and also hold on to workers. They're not really looking to let people go. And they're also looking to raise wages by more than 3%, which is pretty outsized. So all those things are constructive towards continuing to support the consumer. And indeed, consumer spending has been a big piece of the puzzle here in terms of keeping the economy strong, but also fueling inflation. So I think the Fed needs to see all these things continue to cool. And if we don't see that, certainly we're going to adjust our call.
Yes, patient on the data and patient on those decisions. Dana, great to have you. Thank you so much for discussing that with us today.